It's indeed true what you say. We had a good quarter, a top line of 38 billion SEK, 10% up. And because of continued, I would say, challenging market conditions on the residential side, we posted a -1% organic growth, but then we overcompensated that in a strong way with growth through acquisitions of plus 11%. And then, like I said, it's very strong execution, giving us a bottom line and EBIT margin of 16% and a record EBIT of north of 6 billion SEK. Also very strong cash generation in the quarter with a cash conversion of 107%. And we continue to see good market dynamics, I would say, on the industrial side, on the non-residential side. And we see at least a bottoming out and perhaps a first improvement of market conditions on the residential side. That is correct, yes.
I want to touch a little bit later on that residential versus commercial side. But just to start off with that cost cutting, how much can you continue that for? Are you planning to continue that at all? Have you reached the intended goal here?
I would say we have a dual strategy in the sense that we continue to invest in those markets and in those vertical segments where we see opportunities to further grow faster and even grow faster than the market. And then obviously in those markets where we see that the market is more challenging there, we adapt our cost structure to another reality. That's what we have been doing for many, many years. We are a decentralized organization, having the advantage that we can really adapt very fast to local market conditions. If things happen in France, we have a local organization in France that can act very fast. If things happen in the US, the same thing. We don't take decisions on a centralized level for the whole world. We do that through that decentralized organization, giving us that agility to act fast to up or down trends in the market.
Nico, one thing's for sure then, you'll also be impacted by consumer demands, consumer needs, and consumer changes, right? And with the consumer feeling a little bit of a tightening at this stage, are you finding and you're seeing somewhat of a selective customer, not necessarily choosing the higher end perhaps of your security, or perhaps choosing the higher end of your locks and security then, as opposed to the lower end, and really focusing in on what works best, as opposed to perhaps a whole suite and a range of items?
Yeah, 2/3 of our business is non-residential, is commercial, so it's not directly to the end consumer. And in our 1/3 residential, obviously a lot goes through the channel. Our B2C is a smaller part, but it's clear that we live in a world where people have the impression that the world is less secure than, let's say, 5-10 years ago, and that definitely drives the need for consumers to go for more secure solutions. And as we have very strong higher end offering, that is of course a good trend for us as a company.
What about China? I mean, you point out that organic sales growth declined in particular in the Asia Pacific and global technology segment. China still continuing to be a sore spot?
Yeah, for us, China is a small market. We only realize 2% of our top line in China, as compared, for instance, to the North America, where 50% of our top line comes from North America. It's clear that market conditions in China remain very challenging. We believe that construction market has bottomed out, but on a low level, and we clearly don't see any improvement yet, and we don't believe that there is any improvement going to come in the near future. So China market remains challenging for us, but like I said, it's a smaller part of our business.
Let's move to another part of your